Welcome back. Now we are sort of shining the spotlight on the capital market space itself and derivatives trading. I mean, so much has happened, discussion papers, change in thinking over the last, 12 months plus. Sources now tell CNBC TV 18, and we put this out yesterday, that SEBI may tighten access to derivative trading with new suitability norms. There is also, one or two other things we want to talk about, but this is the crux of what we've invited our guests to talk about today. K. Suresh is National President at ANMI, the Apex Brokers Association. Rajesh Baheti is MD at Trustees Capital Services. Gentlemen, great to have both of you here. Thanks very much for joining us. Rajesh, I remember, we've kind of talked about this earlier in the past, and correct me if I'm wrong, what I remember is you being in favor of something like this when there was, talk of doing other stuff. You said maybe eligibility criteria perhaps is a better way to go about this. Your first thoughts?
Yeah, absolutely. Between the two, like tweaking of products or reducing the number of expiries and putting in an eligibility criteria, I was always favoring the eligibility criteria. But I think SEBI has gone on an overdrive to deny many rumors surrounding this after the changes they have introduced. And we clearly see that the exchange volumes have moderated, brokerage incomes have moderated. So I don't know whether this is the right time to go ahead and push for further reform or wait for the new data to settle, look at what's happening, and then probably come out with a paper. Because even though SEBI has conducted a study that says that 90 or 95% of retail loses money, it's very important to understand what part of that retail it is. Are these the people who have no other savings and then these people are betting their salaries? Or these are the people who have other savings, have the necessary wherewithal to bear these losses? So I think they should do a little bit of a deeper study before coming out with a criteria that can hurt the market rather than target what they want to target.
I remember you having kind of sort of, at that point when this was discussed, you had some certain threshold in mind. I mean, what you thought perhaps is appropriate, etc. But what you're saying is, well, this is the way to go, but maybe not the right time, given that volumes, etc., have already fallen after what is done, what has already been implemented, right? Maybe
Absolutely.
give it some time.
You need to, give it some time, let the market settle, and then maybe understand what part of retail is actually losing money and make sure that you're not targeting the entire market, because changing of the products and expiries targeted an entire market. It didn't kind of hit only retail or what they wanted to do. So this time you have to be very sure who your target is, and therefore what you're trying to reduce doesn't kind of hurt the market in other ways.
Yeah. No, in a related way, there is the other sort of aspect as well. Mr. Suresh, ANMI has written to SEBI on restoration of Bank Nifty weekly contracts.
Yeah.
So while we are talking about more steps, and Rajesh kind of says that, well, maybe now's not the time, you're asking to give what they've already done a relook. Restoring Bank Nifty contracts. Tell us what you've written to SEBI. What's the crux of the argument?
So the argument is on many counts, actually. First of all, there's a disruption in the volume of business. As Mr. Bharti said, to the extent of 45% dip in the options volume, which indirectly or rather directly affected the broker's income. I think we must also keep in mind that broking also an industry. We are directly, indirectly giving employment to many people. We are also adopting technology. So that way, we are supporting the whole ecosystem. So here we have to see that the employment at stake because of revenue reductions. So we have to think from that angle also. Second thing is that Bank Nifty is one of the what I can say best instrument available, that to weekly expiry for short-term hedging. It was available. When it was abruptly removed, what happens? Once again, there is a disruption in these strategies by the traders and others. I mean, you have to spend huge money if you take a long-term contract instead of going for a weekly contract. So like that, there is another disruption in these strategies of the traders also is there. ANMI always feels that there is room for educating the people instead of putting the rather making everything stopped. What we advocate is that we must educate the investors so that, particularly for F&O's segment, so that there will be an informed investors who will come and play and rather do something for their purpose. Otherwise, this will lead to a lot of problems. Once again, from SEBI angle, we are agreeing with them that 96% of the people are losing.
Mr. Suresh, is this just a letter? Have you had discussions with SEBI officials on this?
No, sir, yet to. Only we have sent a letter and we are yet to receive a call from SEBI on discussion.
Okay, it's just a letter, which went out about a month ago?
Yeah, roughly around 15 days, I think, 20 days back. 20 days.
Rajesh, you want to sort of comment on this? Because, I mean, all of Mr. Suresh's points, of course, are valid, but, there's also the larger picture which one is to take a call on, and I guess that's why regulators are there. I mean, I guess regulators were worried about this entire almost gamification with real consequences in the option space, weekly options, etc. So just your thoughts.
There are two issues to this. One was SEBI said one expiry per week per exchange. And then SEBI said one contract per week per exchange. If SEBI had just said that let's have one expiry per week per exchange, then NSE would have to, assuming that Bank Nifty was not removed from the weekly contracts, would have had to expire both the Bank Nifty and Nifty on the same day. And let's say I have X capital and I want to use it on a 0 day or whatever SEBI is trying to stop. I only have that one opportunity 1 day a week on the NSE, and I can do it either on the Bank Nifty or Nifty. So to that extent, I think stopping the number of contracts was not such a great idea. Maybe you would have achieved exactly the same result by just saying one expiry per week per exchange. You can expire any number of contracts you want to during the same day, so that a capital can only be used once. You can either use it for this contract or that contract. And to that extent, I think would have had better diversification of risk across markets. So I agree with Andy that Bank Nifty can be reintroduced, but perhaps not on a separate expiry day. If SEBI wants to control the volumes, you have to merge it with the Nifty expiries.
Yeah, we haven't heard the last of it and whether, there will be some change on that or not, because the indication that one also got was that obviously the NSE, and we spoke with the NSE officials just earlier this week, they were saying that why not look at reintroducing Bank Nifty, because obviously it's a product that was very widely accepted in the market. So let's see what happens. But gentlemen, to wrap this up, if I were to ask you, because the objective is to reduce what the regulator feels is excessive and harmful retail speculation. But then, you have to keep brokers' interests in mind, stock exchange interests in mind as well. Raja, if I could ask you, if there is to be some sort of a threshold to limit, retail from indulging in what it doesn't perhaps really truly understands, what sort of a threshold should be thought of? Right now, they seem to be indicating that maybe, have a certain large cash position. Only after that can you enter into F&O. I don't know if that's the right approach. How should this be done?
I think that, the discount brokerages will be having the data to understand what's the lowest rung of the market that is trading in F&O. Do they have equity savings or not? I would just kind of speculate and say if you could bring in a criteria that says you must have 5 lakhs worth of capital market savings and either by way of direct equities, mutual funds, or whatever, And then if you maintain that, you can trade in the F&O. Perhaps the lowest rung that doesn't have savings but just bets his daily or weekly or monthly salary on buying options on expiration days and treats it as a lottery, maybe that can go out of the market. If that is what the aim is, then this would work better than restricting products. And I've said that for some time, that given a choice between the two, I would have gone for this product suitability or some kind of a savings in your bank before you were able to do this.
Yeah,
but you've done the other bit.
Yeah. So don't restrict products, maybe bring in a threshold. Say you have an actual underlying cash portfolio of a certain level, and only after that you can get into F&O. Though I don't know if that really meets the objective, because it's not like their underlying cash portfolio is or can be used as collateral or margin. Not necessarily, may or may not be the case. Mr. Suresh, final word with you. What would you recommend? What kind of thresholds will be palatable to the broker community?
See, actually, there was an apprehension earlier that Bank Nifty is manipulated, etc. Okay, now a realignment has happened to that index. Okay, so it's well balanced now. So the room for manipulation gone. So when there's no room for manipulation, nothing wrong in introducing that. From broker's point of view, mainly, the income already reduced a great extent, and it has affected the functioning of every broker, particularly large brokers also. So from that angle, the employment also at stake for various, the manpower, rather, we are losing many people employment in that segment. As we argued many times back, many years back, that we need industry status for broking actually, because we are directly, indirectly contributing to the economy of the country. So from that angle, my view is that reintroduction of Bank Nifty is a must for bringing back the necessary hedging instrument, as well as bringing up the volumes and also providing another variety of product for the investors as well as for the other players in the market.
Okay. All right, gentlemen, we'll leave it on that note. Let's see what the final rules and guidelines and what's the final structure of the policy as it evolves. Thank you for joining us today.